Okay. G'day, Daniel. Just let me know if you can hear me, mate. I'm not sure my YouTube channel doesn't update enough. Just do that. There we go. Okay. We'll get started. Loud and clear. Fantastic. All right, welcome. Welcome to Trade Setup and the overnight review. So we're just having a look at what happened in the overnight markets in the US and Europe. Talk about gold today. They got smashed last night. US dollar rallied, so it's just the last few sessions have been up and down like a yo-yo pretty much across the board. US, and you can see what, if anyone was watching the SPY, we'll put it up. Well, I'll bring it up now, actually. A bit of window dressing, you call it. Window dressing into the funds and things like that at the end of quarter. So it's not a completely common occurrence, but it does happen quite frequently, especially when you've got the markets been going up since pretty much the start of the year. They've had a good quarter. They're going to lock in some gains, aren't they? Up near the highs. And you expect the market was just chopping around last night. Yesterday day. So that was the action from the open. The market's popped up and it's just turned on a dime, went boom, straight down. There's no lower high, nothing. It was same as previous action. So it's not, to me, that's just choppy, whippy sort of price action. You can see you've got some resistance across the highs there on the SPY. This is a 30-minute chart. Market's looking a bit extended up here. And after, I didn't really think about it too much yesterday about the end of the quarter. But I noticed someone mentioned it somewhere. It makes a lot of sense. They're just banging around, especially the way it got thumped into the close. That's a 4 o'clock close. So started a 4 o'clock candle, went boom, straight down. And the market, I don't know if anyone saw the match from 4 to 4:10. The last 10 minutes, it matched out another 20 points. So it looks like, I'm just assuming, but a lot of gains taken off the table, locking in some profits, tart up their books at the end of quarter, get their performance bonuses, all that sort of stuff, and it happens. So that's looked like what was the play action yesterday. So it'd be interesting to see the next couple of days whether they're going to reposition or the market's going to have a bit of a sell-up. Who knows? The US was up last night, but they're choppy. That's just making back the losses from the previous night. Looks like we're just opening now on the SPY and it's coming off a bit. So the problem is it could be a bit overcooked up here. Last time it was overcooked, it was right up here. Last time it was overcooked again, it was up a lot higher. So it sort of popped off that support zone at 66.61 from overnight, and that was coming into the US session. So the US session's open and sort of popped up and then went sideways for most, the remaining of the session. US dollar was buoyed. So that's down one night, up the next, and I think a lot of it's on the back of, I think it was the White House come out and said last night that I don't know what time. Because the markets are very sensitive to news at the moment, and that's pretty much all the things they're sensitive to at the moment. So the White House come out and said they're not going to delist Chinese companies on US exchanges, US-run exchanges. They said it's just fake news. So it looks like from the action that a lot of them, it's that what maximum pressure coming into a meeting, the trade talks. So it could be that it's just, they let it loose. This is what we're going to do, but then they turn around and say, no, it's just fake news. But they're just trying to pressure the Chinese potentially. There could still be steps that we don't know about. The news changes from day to day, what they're doing, what they're not doing. Come out and say they're not doing it, then turn around and do it, vice versa. So it'd be interesting to see going forward. There's still talk from sources, which is always good. Sources that, they're going to look to, if not take them off exchanges, delist or keep a maximum market cap or something they can have, Chinese companies on exchanges, but some form of pressure, I guess. So the market took that as a turn when the White House said that. They turned around and jumped straight back into risk on mode into equities, a risk out of safe haven or exit of safe haven assets. Like, I don't know if anyone watched the US bonds, the bond yields. So anytime the yields rally, that's the yields going up. That's a sign it's strengthening the economy, moving out of safe haven dollar, or safe haven bonds, because the bonds are actually getting sold down. So the bonds, they're inverse. I guess you say inverse to the yield. As bonds move down, yields move up, and vice versa. So if you're seeing that US bonds are moving down, the yields are probably going up. It's a good thing for safety, I guess, for positivity into the economy. So that was the US, I guess, in a nutshell. Europe was mixed as well. I think the FTSE come under pressure on the open, but then bounced, and they're sort of being supported by positive news out of China as well. Some good data out of China, which didn't do much for us yesterday. And just that change in, I guess, tune on delistings from Chinese companies. So that helped to buoy companies over in over in Europe. Now, Germany was actually, it's interesting because their data come out showing contraction. There is not flash, and I think major. Now I always forget what the term is. Outlooks have changed, a bit more negative on the growth outlook on into Germany, and they're a major, obviously the biggest European country, European EU company, EU country. So anything to happen with Germany in sloth affects the overall EU Eurozone growth. So they're expecting that, growth's going to slow out of the EU. And surprisingly enough, they've probably got a bounced or it got buoyed because, two things. One's that probably means further rate cuts and stimulus to support the area, plus maybe some positivity into the trade war between US and China. If they can come to a deal, that's going to increase because manufacturing is getting hurt in China, in Germany, so that could support them if there's some sort of deal. Crude's still coming under pressure. We'll look at these in a second, but look at that SPY. So the SPY's currently down from where it closed another 14 points or so. So we're expecting, I think it was up 5 to 10 points. We're probably expecting down 5 to 10 points at the moment on the ASX if this holds. So it'll be interesting to just see. Let's just get over to some charts. Not that one, that one. So we'll go just over a few currencies and bits and pieces. This is the Aussie dollar. That looks primed to crack that support zone. Was it around 60, 67.40 or 45? It looks primed to crack that over the longer term, whether it sort of bounces up, but it's been holding. You can see pressure's down, lower highs. We'll just draw that up. Lower highs here, another key lower high, and the market's been capped at that zone. So, okay, that would lead to a bit of a move down, you would expect. Potentially, this is what we could be looking at. Let's just if that's the case, we could be looking somewhere down towards about 6,700. It's only about 40 or 50 pips away. It could extend that. Does that take us into the zone? Probably more than likely that another move down could lead to a bit more of a solid move down to this support zone. And you can see that that's touched that a few times now. So really an extension of that may really blow out and come down to, about 50 pips or so. If that's the case, so we'll just have to see what happens to the Aussie. But it does look, the pressure's down. It looks heavy. You've had this, if we just I want to go to a different chart. Where is it? Here we go. Auto. You can see that pressure's been down for quite a while now. You had the pressure expand down. Okay, it chopped around, held support, bounced up. It's taken a bit of a run up on that support now. So potentially from here, it's just a deeper correction. We're heading down to retest this zone, 67 or below. We'll just have to see how that plays out. But that would probably, I guess, add up to further rate cuts. We're expecting interest rates at 230 today. So just be wary. We've got numbers out at 11:30, some building numbers are quite important to our economy. And then we've got interest rates at 230. So they're expecting a quarter point cut from 1 to 3/4 of a point, percentage point. So just keep an eye on that today at 230. You might get in a position intraday and then you get chopped around and wonder why. That's because of interest rates to be out. There we go. Euro continues the pressure on the downside. There's nothing really that flashy on the euro. If we just go to all right, there we go. So it just continues. It continues south. So if we see where it could be going to, and if you just look at, come on, that there, roughly in proportion that move down, then you take that as a key contraction, because that's all part of one leg, up, down, up, down, up, down. As soon as we break up through the anchor, it resets itself. So that's a major wave, and potentially this is another major wave down. Oops, we can grab that, which could be taking us down towards 107.86. Let's just see what's on the left-hand side of the chart. Probably not much, to be honest. Might have to go to a daily, see if there's any support coming through. Yeah, which, it was still a while off. It could be we're moving back down to 105.26. Now, that's a big move, though. It's on the daily, but that move down doesn't look quite as severe. I mean, the market tips over here, consolidates, bounces up. It doesn't tip over, so it's not looking to be tipping over, but it is still edging down. So either way, if you're into, say, the euro, you're trading that, the market, the bias is down for sure. I think we alerted this one. If you check out on the trading view, just remind to jump on the trading view, onto trading view, follow us at capital T trade _ capital S for setup. And you find I think there's a video I posted up on this, what we're looking at just for continuation down. So once you've got these clear zones in place, you're just trying to basically get the bias and get your entry. And it's played out nicely so far. So far, so good. It's holding. We'll see if that continues. Let's get pound. Again, it's been chopping around this zone. I probably won't look at that much. It's not really a key one for me. It's chopping around this zone around the 123 whole number. And that's previous support. They've got two things. A stronger US dollar should pressure that, but it's always also jumping a lot around Brexit and any sort of Brexit news that comes out. So it's a harder one because it's that news release driven rather than economics and fundamentals and things like that. It's more just news driven, news headline. US yen, it's been lifting. Whoops. Been lifting. So, whether there's some trades on that, we'll just keep an eye on that. Now, we've got a Dow. So this is a Dow index. You can see it's, we had this high or offer zone or supply zone built up around 27, 300, 350. Build up here, and it's pulled back, formed the base, lifted again. So this is where the negativity was going on. As soon as we built that high low, okay, something's not right, and it's just popped up. So the economic numbers are still supporting that market, stronger economic numbers. And like we said on Friday, they come out with probably some cracks appearing in consumer spending, which could really start to pressure this market lower. So now it's really just what happens with this support zone. This is one I've really got in earmarked at the moment, around 26,700. The market's still pressuring down. It seems to be rolling over. What was that? What am I on? 30-minute chart. Down to this average. It can't be moving. That's closed. So anyway, it's opened up overnight, positive, and then sold off slightly into the close, but sort of held under some gains. But that could be just starting to retest this inside level. So we're going to do two things. We'd be looking at this. Just because it's holding in here doesn't mean it's going to go down, but also doesn't mean because it's holding support it's going to go up. But you want to see the action. So ideally what I'd be looking for here, if we're going to be bullish, potentially something like this. This is what could be looking for, that sort of squeeze in here. The sellers start to come in. They think it's going to be pressured down. It's still holding lower highs, overall, but this move down is sort of broken. So for me, you got that double top in here. Okay, double top leading to a deeper correction of this move, of this low. It has done that, retested this zone at 26,700, bouncing off there, retested again. So it's been holding up 1, 2, 3, 4 times. Okay, buyers have been stepping in to support that zone. So if they start to step in, it backs off here, and they start to step in again at a bit higher level, that would lead me to believe we're going to go straight up and through, potentially into new highs. All right, if not, we could just plow through this low from here. It's looking set up. The momentum on the upside slowing. We got that turning from oversold to overbought. It got extended up here, so it can come straight back down to oversold. Pressure on from the sellers, but it's holding up at a higher level. So that's sort of thing we want to look at. Something like this went from overbought to oversold. It held at a higher level, but then it got sold off again once it got up there. So it could just be it's ranging. It's stuck in that range until the 10th, 11th of this month. It's a few days away when the Chinese and US have a little bit of a powwow, a meeting. S&P much the same. DAX, DAX looks to be heading higher. Let's just have a quick look at that. It's going along strongly, but that, if this becomes a key lower high, we've got all this overhead resistance still. A resistance zone or supply zone, what we said. Market's pressed up. You've retested this low, retested that high, and then, okay, once you sort of get that double top, you get that major retest and failure, what we've got with this lower high come into play, you're looking for attack on at least the lows or potential break, and you got that. You got the break of the lows, come back in. We're looking to short it here. I think we put an alert out somewhere or an idea, and it come out nicely, but there's turnaround and basically 1, 2, that's your secondary move down. I'm guessing if you measure that, it's quite even. So it's quite handy to get in the habit of just measuring those moves. I mean, look at that. Pretty much to a T, you got that extension, go away. That extension lower, pop back up, major lower high, major press down. So what you've got there is that two-legged washout, you like to say, and it's going to do that after it sort of fails to get out the highs, and then you want to just see what happens from there, and it seems to have reset it and just bounced straight back up again. So we'd be looking for, on the DAX, if you're a DAX trader, there is potential if this starts to break down this leg up from, was it 25th of September, a few days ago? It was about Wednesday last week. It started, pushing up. If this fails here, you've got a key lower high, a major lower high, and then you're looking for that 1, 2 move, and the same thing, 1, 2, and that could take us down to, 12,100 or below, another 300 or 400 point move. I'm just kicking my screen out there. All right, so we'll keep an eye on those. To me, it's markets overall. You got Dow's actually not looking too bad. Okay, it's rolled over. That was into the close. That was only a 30-minute chart anyway, but it's sort of consolidating through here. Support and resistance, 300 point sort of range. The S&P very similar. DAX is heading higher. UK's actually, I think they're heading a little higher or consolidating those highs as well. So the big thing is gold, and that was a bit of a shift overnight. And we'll take a bigger view of this. Let's go straight out to a daily, if that makes sense. So this overall trend, it is quite bullish still, but it's whether we found a bit of heat here. We have to come back, reset, potentially reset around 13.7, another $100 lower, reset, hold a lower high. That would sort of be in line with this zone potentially that's played out before. We've had market press down, react high, sort of through it, pull down, bounce back into that zone, sold off from it, bounce back into the zone, found some sellers, pull back, high low, back in again, high low, up we go. Ended up, so you can see that zone's had some activity a lot before, which wouldn't be great if you're a gold bull, because that would suggest, like I said, $100 drop. But longer term, there's no reason why we can't do that. Edge your way down and bounce back up. This leg doesn't have to just keep going because, what we believe is it looks like it's had a lot of time holding up at these highs, expecting that negative noise to play out in the US, but it hasn't. The economy is still coming out with some half decent figures, pretty good figures, holding, inflation's in check, all these sorts of things. Yet we're talking the next recession. Apparently it's inevitable. Nothing is. News doesn't know what they're talking about half the time. The market will do what it's going to do. So if that doesn't play out, and that's why I think gold, anyone's long has probably got sick of holding it. Maybe there's going to be a deal come out the 10th, 11th. We don't know. No one really expects it though. News is it's going to be a bit of fluff. People suggesting it's a bit of fluff coming out of that meeting, trade talks. Maybe some sort of, because neither country wants things to escalate and markets to crash. Neither country does. So they're going to come out. Maybe they can't come to a deal, but they come with some sort of fluff or something that's going to keep traders happy and keep them buoyant. We're coming into US earnings soon, I think. So it'll be interesting to see how they get through earnings. Whether they're expecting weaker than previous, but there's talk that it's not going to be that bad. So it's going to be interesting to see how that plays out. So that was gold. So on a daily move, should this move high to lows? If you do the same sort of process, we're probably, let's go to a 2-hourly chart. If that's the case, you had that pressure down. We've cleaned out this lows, so maybe that's enough and we start building the base from here. That doesn't look good. People call that a head. head and shoulders, those things that they're common knowledge. So the market can sit there and go, if we're not going to go up, we're going to take out some stops. We might need to wash out some stops. Then it resets itself and starts getting buoyed from here and takes off into new highs. Or either way, this leg looks kind of extended. So you understand what I'm saying? So just by looking at that, that's your leg down. We've tried to go back up again, so it's a key push up and then a key rollover from a lower high. But when it's getting down to sort of these levels where it is now, 1470, it looks like it's extended. So it might just chop around here, wash out, bounce, build a high low, work its way back up, and then potentially build another key lower high somewhere around 15, 10, and then you think the pressure's going to be on. But we'll have to wait and see. I'm not going to be bullish on this right now because of, this one little line, but, it's going to bring in anyone that hasn't sold it in this action through here, it's got up through here, it's come all the way back down, and the second time it sort of starts to get up. If you haven't sold your longer term position, you're probably going to be committed to holding it anyway. So maybe, sellers done, have to see what happens, see if there's any buyers willing to step in here, if this is a washout. If not, what you'd want to see is, if it's a key washout, is start to pop up, and then, same sort of action, that it needs to hold some higher levels. And if it does that, but over a good period of time, that could lead us to push back up through this high, and so on. Yeah, and continue that longer term leg up. Now, where are we? We'll just go and see where the ASX is now. That's about it. So today, it will, like I said, it'd be interesting to see the SPY. It looks like it's holding down, up 4.8 points. That's not much different to what I expected, really. So 5 to 10 points up on the open. Looks like the SPY has sort of overshot the mark on the downside. We're just waiting to see, but this, whether we can hold up and bounce off these MAs. We pressed up, pulled back to the MAs on a daily chart, whether we can bounce up here. We've gone from overbought to, it's a decent correction, and it seems to be holding. Momentum seems to be slowing now. Doesn't mean anything. The momentum can just slow, come back to zero, and pop back up again. So we can, from here, here, there's nothing definite to say, well, okay, we're going to roll over just because we're extended up here. We've had a couple of days, cleaned out a few, could start our way back up again and trade back up through the highs. The weekly, let's just go to the weekly. Weekly, you get this chop around. We've seen it before, probably not so much in here. A bit of an easing back, consolidate around the MAs, and then up we go again. But those MAs are well entrenched in the upside. So if this is your leg up, we just have to wait and see. Well, let's just go and have a quick look. And I've got this here somewhere. Just want to check out one thing. Any questions while we're going, just while I'm getting this up? Just want to go to a weekly chart. That's the case, yeah. This could take us through the highs. Oh, look, it's an interesting, because if you're sort of measuring those legs, I mean, if that's the previous leg up there, the length, it's probably a bit less than the leg before that, about even to the initial leg off, from the GFC. So that bounce in the GFC, you got that sort of press from lows to high, resets, lows to high, it extended a bit more. Okay, probably got a bit, and you can see this first move to 56.74. It backed off, then took out the highs again before it had a deeper correction. So that the high was there. It's a longer leg, a more established leg. Then this leg was about the same. If you look at that, the fact that we've got the all-time highs, it powered up into the all-time highs. It may not finish that. It may not have finished that move just by looking at that. I mean, there's potential for it to still tick up another few hundred points, say 300 points, 400 points from here. Again, we're just trying to get an idea of what could be going on and setting ourselves. But at the moment, it looks like we're still in this contraction. As long as this sort of contraction holds, I'm not convinced that we're going to have this major corrective rollover, getting smashed on the daily and the weekly. So we'll just see how it keeps going. Anyway, ASX will be open by now. We're up 7.8 points off and racing. We'll just see what happens today. So on the SPY, I'm not really doing too much. It'll be interesting to see if we can hold that high low here and start to lift. and then gunning for taking out those highs, 66.89, see if we can bounce back and make back some of this move down. It's all dependent on what happens. Obviously, what happens, but I'm just getting the 5 minute now. Yeah, all right. So if it gets sort of extends down to here, it extends into that zone and starts to look like it's one of those outside in or that reversion to the mean style of trades, then it could be a goer. But we'll just have to wait and see. All right, guys, call it a day there. Thanks very much for joining me. Any questions, like I said, feel free to send us an email to support@tradesetup.com.au, and then we go from there. All right, guys, have a great day. I'll speak to you again tomorrow.